How's it going, everyone? My name is Dan, but you can call me Malone, and last week we made a video about the S&P 500 index. We talked about everything you must know about the S&P 500 before making any decisions to invest in the likes of an exchange traded fund or mutual fund which tracks the index. So this week we're going to take a look at another one of the most popular stock market indexes in the world, the NASDAQ. So if that sounds good to you, before we begin, can I ask you to please leave a like on the video? By liking the video, you're playing your part in spreading the word about the importance of financial education, so thank you in advance for doing that. And if you are new around here, please do consider hitting that red subscribe button below and joining our community of financial enthusiasts. We make financial education videos on this channel aimed at making conversations like these more of a cultural norm. So without further ado, let's get started. Let's start things off by clearing up some confusion. What exactly is the NASDAQ? The NASDAQ, which stands for National Association of Securities Dealers Automated Quotations, is an electronic stock exchange in New York where mostly technology stocks are traded. The biggest difference between the NASDAQ and the likes of the New York Stock Exchange is that the NASDAQ doesn't have a physical trading floor. You know those scenes in movies where traders are yelling and screaming buy and sell orders at each other? That doesn't happen on the NASDAQ. Instead, all of the transacting is done digitally through a network of connected computers. But the term NASDAQ also refers to the NASDAQ Composite, which is a stock market index that measures the performance of thousands of stocks listed on the NASDAQ stock exchange. Now don't worry, we'll be discussing all of this in very simple terms throughout the video, but just remember that the definition of the word index is a sign or measure of something. Therefore, the NASDAQ Composite Index is a measure of the stock performance of thousands of stocks listed on the NASDAQ stock exchange. So now that we've clarified that the term NASDAQ actually refers to two separate things, let's take a look under the hood of the NASDAQ Composite. Okay, so similar to last week's video on the S&P 500, what I have in front of me here is what's known as the fact sheet for the NASDAQ Composite. These fact sheets will tell you everything you need to know about the index that you're looking at, and you can find the fact sheets for most major indexes online. And don't worry, I'll leave a link to all of these resources in the description if you want to go check them out for yourself. So the report starts off by saying the NASDAQ Composite Index measures all NASDAQ domestic and international based common type stocks listed on the NASDAQ stock market. To be eligible for inclusion in the index, the security's US listing must be exclusively on the NASDAQ stock market. Some very interesting points in that first opening section. We can see that the NASDAQ Composite Index measures both domestic, which is US, and international based stocks. And this is different to the likes of the S&P 500, which, as we found out last week, measures only US domestic stocks. The report also tells us that only those stocks which are listed on the NASDAQ stock market will be eligible for inclusion within the index. So therefore, any stocks which are listed on the New York Stock Exchange won't be seen within the NASDAQ Composite Index. The only exception to this rule is if the security was duly listed on another US market prior to the 1st of January 2004 and has continuously maintained such listing. So what this means is that if you did have a company which was listed both on the New York Stock Exchange and the NASDAQ, that company could be included within the NASDAQ Composite if this occurred before 2004 and it's maintained that listing since. But for the most part, only companies listed on the NASDAQ Stock Exchange will be included within the NASDAQ Composite Index. It has to be the NASDAQ and only the NASDAQ. The security types eligible for the index include common stocks, ordinary shares, ADRs, shares of beneficial interest or limited partnership interests, and tracking stocks. Security types not included in the index are closed-ended funds, convertible debentures, exchange-traded funds, preferred stocks, rights, warrants, units, and other derivative securities. So this section is effectively just saying what type of instrument can and can't be included within the NASDAQ Composite Index. So moving on to the quick facts section of the report, we can see that there are nearly 3,000 securities included within the NASDAQ Composite Index. And this is obviously significantly more than the 505 securities which are included within the S&P 500. Just to point out as well, this report is dated the 31st of December 2020, so it is likely that these figures have changed somewhat since the initial publication. We can see that the NASDAQ Composite returned 43.64% in 2020, which is just absolutely incredible when you consider both the events of last year and also the fact that this index measures nearly 3,000 securities. If we scroll down to the annual performance section of the report, we can get a better idea of the historical returns of the NASDAQ Composite. In 2020, as we mentioned above, the index returned 43.64%, 2019 35.23%, 2018 minus 3.88%, 2017 28.24%, 2016 7.5%. Again, you can see a significant degree of volatility in these annual returns. But what's really interesting is that over the last 10-year period, the NASDAQ Composite Index has only returned negative returns on 2 instances, 2018 and 2011. And if we take a look at the 5-year and 10-year charts for the NASDAQ Composite, we can see that the index is up 157% and 385% respectively, which is just incredible performance. So how come the NASDAQ Composite Index has been so successful? In order to answer that question, we need to take a look at the individual index weightings by both company and by industry. The NASDAQ is what's known as a market capitalization weighted index, or market cap weighted index. Market cap is effectively just the value of a company as determined by the stock market, and is calculated by taking the number of shares outstanding and multiplying it by the current share price. When an index is measured by market cap, what this means is that changes in the share price of some companies included within the index can have a greater impact on the performance of the index as a whole as compared to others. So for example, if company A has a higher weighting than company B, well then changes in the share price of company A are going to have a greater impact on the performance of the index as a whole as compared to changes in the share price of company B. So if we take a look at the weightings of the NASDAQ Composite, we can see that Apple has the highest weighting, followed by Microsoft, Amazon, Tesla, Facebook, Alphabet, which is Google, Nvidia, PayPal, and Adobe. So while the NASDAQ Composite is made up of nearly 3,000 stocks, these top 10 securities account for nearly 45% of the total market capitalization of the index. So whether or not these 10 securities are performing well or poorly is going to heavily influence the performance of the NASDAQ Composite as a whole. So to answer our original question, why has the NASDAQ Composite performed so well? Well, because Apple stock gained over 80% in 2020, Microsoft gained 40%, Amazon gained 70%, and Tesla, well, that gained over 700%. So as I mentioned a second ago, the report that we're looking at was released on the 31st of December 2020, and therefore its data is outdated as compared to now. But if we look at the Slick Charts website, which effectively contains all the up-to-date data on the market capitalization of the various companies included within the index, we can see that the rankings have changed slightly. The biggest change between the Slick Charts website and our report is that Adobe is no longer in the top 10 rankings, but instead has been replaced by Intel. And we can see that both Comcast and Netflix have overtaken Adobe. And what this goes to show is that the NASDAQ Composite Index isn't necessarily just fixed in time. It's constantly changing its weightings and rankings based on the underlying share price of the companies which are included within the index. So this is really just something to keep in mind when you're looking at the performance of an index over time. It's constantly changing alongside the changes in the share price of the underlying securities. And if we take a quick look at this weighting column, we can get an idea of where things stand as at the 18th of March, which is when I'm recording this video. So we can see that Apple has an 11.3% weighting within the index, Microsoft at 9.5%, Amazon at 8.2%, Tesla at 4.2%, and when we compare this to our report, we can see that the biggest changes really are within Microsoft and Tesla, which both have about a 1% higher weighting than they did compared to December. Like we mentioned last week in the S&P 500 video, if you were to take €100 today and invest it in an ETF which tracked the entirety of the NASDAQ Composite, €11.36 will go towards Apple, €9.57 will go towards Microsoft, €8.26 will go towards Amazon, etc. etc. So if we take a look at the industry breakdown section of the report, unsurprisingly, technology companies account for 48.16% of the total market capitalization of the NASDAQ Composite Index. And this is followed by consumer services at 19.49% and healthcare at 10.16%. So obviously the performance of the technology sector is going to heavily influence the performance of the NASDAQ Composite as a whole. And because most growth stocks stocks these days operate within the technology space. This is why the NASDAQ composite has a higher degree of volatility as compared to the S&P 500, which has a lower weighting towards technology stocks. But the NASDAQ's volatility is also due to the fact that it contains a lot more positions of arguably lower quality than the S&P 500 and is therefore more susceptible to large value swings in down markets. The other point to note about the NASDAQ composite is that it's significantly easier to be included within the NASDAQ than it is to be included within the S&P 500. Make sure you check out last week's video to find out why that is, but ultimately it comes down to the NASDAQ not having requirements around liquidity, minimum market capitalization, and geographic location. So, having discussed the NASDAQ in detail, you might have one question on your mind: can I invest in the NASDAQ? To my knowledge, there isn't currently any exchange traded fund or mutual fund which tracks the entirety of the NASDAQ composite, which to be fair is understandable because managing and balancing a portfolio of nearly 3,000 positions isn't the ideal scenario for any passive investment strategy. However, the next best choice will be the Invesco QQQ, which is an exchange traded fund or ETF which tracks the NASDAQ 100 index. Quickly looking at the Invesco QQQ fact sheet, we can see that the NASDAQ 100 index includes 100 of the largest domestic and international non-financial companies listed on the NASDAQ stock market based on market capitalization. The fund and the index are rebalanced quarterly and reconstituted annually. So effectively, this ETF will allow you to own a portion of the top 100 companies included within the NASDAQ composite. Remember, the NASDAQ is weighted by market capitalization. So by tracking the top 100 companies, an investment such as QQQ would strongly reflect the total returns of the NASDAQ composite as a whole, because again, the top 100 companies are going to account for the vast majority of the market capitalization of the NASDAQ composite as a whole. So we can see from the Invesco QQQ webpage that this fund is rated the best performing large cap growth fund based on total return over the past 15 years, and it's the second most traded ETF in the US based on average daily volume traded. We can see from the graph on Invesco's page that the Invesco QQQ fund has significantly outperformed the S&P 500 over the last 10 years. And this of course is due to the fact that the NASDAQ composite has outperformed the S&P 500 over the last 10 years. But just look how closely correlated the NASDAQ 100 index and the Invesco QQQ ETF are, meaning that an investment in the QQQ ETF is going to be highly representative of the NASDAQ. So that just about wraps up the NASDAQ composite index. It's always interesting to take a bit of a deeper look into the fact sheets of these indices to see how exactly they're made up. And like with any investment decision, you should fully understand what it is you're investing into before you pull the trigger on the purchase. If you haven't checked out last week's video on the S&P 500, it should be popping up sometime soon on the screen. But again, I would highly recommend going ahead and checking it out. It's in the exact same format as the video we did today. And an understanding of the S&P 500 index really is critical for every stock market investor. So I really do hope you enjoyed the video here today. As always, if you did enjoy the video, please do let me know in the comment section below. Leave a like on the video, subscribe to the channel, and I'll see you in the next one. Cheers.